In this video, I'm going to explain the tax differences between sole proprietorships, LLCs, multi-member LLCs, partnerships, S corporations, and even C corporations. And I'll be using this visualization to teach you what type of taxes you have to pay, as well as how much you have to pay, depending on which tax classification you elect. So when you get to this portion of the video, you'll learn how much Social Security taxes, Medicare taxes, federal income tax, and state income tax you pay if your business earned a profit of $100,000 in each of the 4 tax classifications. So, as you can see, we have a lot to cover, so let's jump right into the video. But before we do so, let me quickly introduce myself. My name is Navi Miraj. I'm a CPA who teaches entrepreneurs how to save thousands of dollars in taxes. I do that for free here on social media, but I also teach it in a much more comprehensive and easy to understand manner through a course. The course is designed to take someone who knows nothing about business taxes and convert them into a tax-savvy entrepreneur who learns and implements tax strategies that can save them thousands of dollars. You can find more details about the course on my website, which is navimuradcpa.com. So before you panic, let me just say that you are going to understand this by the time you finish watching this video. So don't freak out by all the colors and the columns and the numbers here, okay? Remember a moment ago, I shared with you that there are 4 main tax classifications. Well, that's what these 4 columns represent here. We have sole proprietorship, S corporation, partnership, and C corporation. So what I'm going to do is show you what taxes you have to pay when your business is structured like these 4 tax classifications. So in our example here, I'm going to show you, if you earn $100,000 in profit in your business, I'm going to show you what taxes you might have to pay as an individual and what taxes your business might have to pay. Now, I'm going to go into depth when I'm explaining the sole proprietorship, and then I'll speed it up just a bit once you have the terminology down and you understand some of the basic concepts, all right? So let me start walking you through this. Let me give you a little bit of layout of the land first. Again, these are the columns across here. We have sole proprietorship. And remember I said, if you form a single member LLC, you're taxed as a sole proprietorship. Then we have S corporation if you've made the S corp election. Partnership, and again, you either form a partnership just by, meeting up with someone and say, hey, do you want to get into business together? They say yes. Okay, you formed a general partnership. Or you could end up filing a partnership tax return if you did it on purpose, meaning that you formed a multi-member LLC and there are 2 members. And like we said, by default, it's taxed as a partnership. And then the C corporation, you went to your state, you filed a C corporation, and so you're going to get taxed this way, okay? So let's go one by one. Sole proprietorship. What I'm saying here is that your business revenue is $125,000. What that means is, let's say you perform a service or you sell products, all the customers for the entire year, they paid you $125,000. So your business sales was $125,000. Then you had $25,000 in business expenses. This could be advertising and marketing. This could be legal fees. This could be social media ads, okay? Your business expenses were $25,000. So you have a business profit of $100,000, okay? Now, if you're taxed as a sole proprietor, what taxes do you have to pay? Well, you typically have to pay Social Security and Medicare taxes. When you're a sole proprietor, for whatever reason, the IRS kind of does something a little bit silly and they call that self-employment taxes, okay? So those are synonymous terms. Social Security and Medicare tax and self-employment tax are kind of synonymous in the sort of sole proprietorship tax world. So how much of these types of taxes do you have to pay? Well, $100,000 times 6.2% because you are the employee, and when you're a sole proprietorship, you are the employer. Okay, so it's really 100,000 times 12.4% equals to $12,400, right? That's kind of easy math. You can do that in your head. Likewise, with the Medicare, you have to pay the Medicare tax for the employee and the employer because you are both as a sole proprietorship. And so 100,000 times 2.9% is $2,900. So if you add these two together, you're paying about $15,300 or 15.3% in Social Security and Medicare taxes, okay? What other taxes do you have to pay? You don't have to pay the C corporation tax. That's strictly for C corporations. You will have to pay federal income tax though, right? Now, let me explain what's going on here. With the federal income tax in the US, we have a progressive tax system, okay? So what that means is not all of your income is taxed at, let's say, 25%. How it works is the first sort of $10,000 of income you earn is taxed at 10%. Then the next set of dollars is taxed at 12%, then 22, 24, 32, 37, I believe those are the numbers. But there's various tax brackets, and as you earn more money, then that additional money is taxed at the higher tax bracket. Just because you jump into a higher tax bracket doesn't mean that all of the previous dollars earned are taxed at that higher bracket, okay? A lot of people get confused by that. It's a progressive system. As you make more money, you go into the additional tax bracket. So what we're saying here is if you earn $100,000 in profit as a sole proprietorship, what would be happening behind the scenes is you would get the standard deduction. You'd also be getting something called the qualified business income deduction. I'll touch on that a little bit later. But basically, even after calculating for all those things, you're going to end up paying $10,000, $10,064 in federal income tax. Now, I'm assuming you're a single taxpayer, so you're not filing jointly. If you were married filing jointly, it would be a little bit less. Okay. You don't have any capital gains tax to pay as a sole proprietor. And so what about your state income tax? Now, I'm going to, sort of digress a little bit and talk about the state income tax. You may be in a state like Florida or Tennessee, for example, or Texas that doesn't have a state income tax, okay? Or you might be in a state that has a fixed income tax. So states like, I think Alabama, for example, might just say, hey, whatever your taxable income is, we're going to tax that at 5%, okay? So all of your tax or all of your income is taxed at 5%. So that's what I did. I just made it $5,000 across the board here to keep things even. So this is showing you like a fixed income tax of 5%. Your state could have a progressive tax, okay? Just like the Fed has. So a state like California, for example, they might give you a tax rate of like 3%, then 5, 7, 10, 12%. I think it goes all the way up to 13% marginal tax bracket. But again, for simplistic purposes, just to simplify this explanation, we're going to go fixed at 5%. So your total taxes is $30,364. That's the 15,300 plus the 10,064 plus the 5,000 equals 30,364. Okay, that's the sole proprietorship. I'm going to go a little bit faster now that you have that foundational understanding. Let's look at the S corporation. So the same thing happened at the S corporation. You had $125,000 in revenue, $25,000 in expenses, $100,000 of profit. But look what starts to differ here. With the S corporation, the reason why I mentioned earlier that this is a strategy to help save money in Social Security and Medicare taxes is as follows. You're actually going to split this $100,000 of profit into two distinct buckets. One bucket is your reasonable compensation, okay? So you have to pay yourself a reasonable compensation based on the services that you performed for your S corporation. So I'm just picking this number arbitrarily. It's $40,000. And so what taxes or what Social Security and Medicare taxes do you have to pay? Well, you have to pay $40,000 times 6.2% as the employee. That's $2,480. I'm going to say your name is John here again, $2,480. And what Medicare tax do you have to pay? $40,000 times 1.45 is $580. Now, John's S corporation or your S corporation, whatever you named it, also has to pay Social Security and Medicare tax. So the 40 grand times the 6.2 in Social Security for the employer side is $2,480, and the Medicare tax is $580. But if you add all four of this amounts together, you get $6,120. So you can see here how you have a potential tax savings between Social Security and Medicare of roughly $9,000, right? $9,180. That's the 15,300 minus the 6,120. Okay, let's keep going down. Federal income tax is a little bit higher. I don't want to really go into the weeds here of why that is, but basically it has to do with the qualified business income deduction. And so it's a little bit less when you're an S corporation. And so what's happening is you're paying a little bit more federal income tax. State income tax, we talked about that already. I'm just going to keep it, even across all of the comparisons. So $5,000 is how much you pay in state income tax. So what's the total tax here? $22,746. So you can see how this saves you, between $7,000 and $8,000 in taxes. And the majority of that came from the Social Security and Medicare tax, okay? So that's the S corporation, and that's why most entrepreneurs have their operational business tax as an S corporation. Let's look at the partnership, okay? Again, multi-member LLC, you got two partners. What I did here is I increased the dollar amounts. I said, let's say your revenue is $250,000, your expenses were $50,000, so you're left with $200,000 in profit. The reason why I did this, why I increased the numbers, that is we're gonna have two partners, right? You're gonna have John as partner one, and then you're gonna have a second partner. So I wanted to have an apples to apples comparison. So John's portion of this $200,000, assuming they're 50% partners, is gonna have $100,000 of income. Now, how much, or I should say taxable income. So how much of this is going to be subject to Social Security and Medicare tax? Well, if you look closely, this is exactly like the sole proprietorship. It's 100,000 times the 12.4% because you're paying the employee and employer portion. And it's 100,000 times the 2.9% because you're paying the employee and employer portion of Medicare tax. So the total Social Security and Medicare tax here, remember we said that's called self-employment taxes when you're a partnership or a sole proprietorship, is $15,300. So let's keep going down this path of the partnership. Federal income tax. I'm not going to explain it again because if you notice, it's exactly what it was with the sole proprietorship. $10,064. State income tax, same thing, $5,000, just like it was over here. And the total taxes is $30,364. So you can kind of see that the partnership is really like having two sole proprietors come together to do business with together, right? So that's why it's the same tax that you pay, all right? It's just that you're forming a partnership and you have to file a partnership tax return instead of that being on Schedule C of your individual tax return, okay? So that's the partnership. Last one, C corporation, okay? Numbers are going back to what they were before, 125,000 in revenue, 25,000 in expenses, $100,000 in profit. Well, with the C corporation, you got to pay yourself a reasonable compensation for any work that you sort of performed yourself in the business. So what Social Security, Medicare taxes you have to pay, it's exactly like the S Corp was. You know, you pay 12.4%, but that's broken up between 6.2 for John and 6.2 for John's C corporation. And then for Medicare, it's 1.45% for John and 1.45% for John's S corporation, okay? So that's $6,120, which like you see, is just like the S corporation. So when you look at this at first glance, you're like, okay, Navi, well, this entity can save me the same amount of Social Security and Medicare taxes that the S corporation does. And you'd be right. But here's where things start to differ. A C corporation is not a pass-through tax entity. What that means is the C corporation itself has to pay an income tax. With the sole proprietorship, the S corporation, and the partnership, the entity itself does not pay any income tax. The entities did pay Social Security and Medicare tax over here, okay, right? But the C corporation is going to get a tax on the profit that it had. So $60,000 of profit is how much the C corporation remained because it paid, of the 100,000, it paid 40 out in the form of a salary. So it had $60,000 in profit left. And as of 2023, the tax rate for C corporations is a flat 21%. So 60,000 times 21% is $12,600, okay? Again, the C corporation has to pay that. All right, let's look at the other types of taxes. Now you're looking at this number and you're like, wow, this is really low. The federal income tax. So the C corporation is paying, I should say, John is paying a lot less federal income tax because the income tax is only on the $40,000 that he took as a salary. But what happens is if John wants to take out the $60,000 from the C corporation would pay him a dividend, okay? And so this is what's referred to as double taxation. The C corporation paid $12,600 in taxes already, and then John, the shareholder, is gonna have to pay capital gains taxes on the dividend paid to him. And so we're gonna say that John decided to pay the dividend of $60,000, and so he has to pay capital gains tax. Now, the math is a little bit weird here. On the left, you can see that federal capital gains tax rates are either 0%, 15%, or 20%. Those are the various tax brackets, and I'll show you that visually here in a second. But what's happening here in this particular situation is that some of the capital gains is actually not getting capital gains tax rates because John made such little money. And some of it's going to be taxed at 15%. So I'm sorry that this math isn't super easy. It's not just 60,000 times 15%. It's a blended rate between some of it was 0, some of it was 15. So the capital gains taxes are $6,230. State income tax, again, is $5,000. I'm just keeping that uniform across all four. And so the total taxes is $32,870, which is even more tax than you would pay as a sole proprietorship, all right? This is why the C corporation, in my opinion, is not best when you're operating a small business like this, okay? C corporations are mainly for very large businesses like your Amazons of the world, your Apples of the world, okay? They have many, many, many shareholders. They're trying to raise capital. They do a lot of unique things. And so the C corporation structure makes sense for them. Now, if you're a little bit tax savvy and you maybe know this, the $60,000 technically didn't have to be paid in a dividend this year, okay? So even if that was the case though, you'd still have to pay, the C Corp would still have to pay $12,600 in C Corp income tax. You just might, delay paying the capital gains tax of $6,230. But if you subtract $6,000 from this number, you still get about $26,000 or so, which is still higher than the S corporation, right? So it's not really a strategy that most people think it is. It's not really the best strategy out there, especially for your small business owner. Okay, so in a moment here, I'm going to show you sort of a tool that you can use to recreate all these numbers for yourself, because your numbers are likely going to be different. So before I do that though, let me just read this note. It says here, remember, this is all just an estimate. For the sole proprietor and partnership examples, if you really wanted to dial in the number, instead of doing 15.3% here, you would multiply this by 14%. So this would probably be more like 14,000 and these would be more like 14,000. The reason for that is you do get what's called an adjustment to gross income. I don't want to go into all those weeds here, but you would get sort of like a tax deduction for half of the Social Security and Medicare tax you would have to pay. And as a result, the way the math kind of works out is that, you'd pay around $14,000 here, again, for the sole proprietorship and the partners in the partnership. Let me show you some resources, okay? So I just wanted to show you this real quick. This tool is from Ameriprise. If you're watching on YouTube, I'm gonna put this in the description below. You can use these calculators to input what your numbers are and calculate how much tax you might have to owe. So you can kind of just see, these were the examples for the sole proprietorship, the S corporation, partnership, and C corporation. So that's where I got these numbers from. Pretty good calculator. Admittedly, there are a lot of different fields that you can input, so be careful of where you're putting the fields in, but if you follow my example, I think you'll do just fine. Also, I'm gonna put these resources down below. State income tax rates, I got it from the Tax Foundation, link will be down below. And here's that capital gain tax rate where I was just kind of saying it verbally, depending on how much income you earn and your filing status will dictate how much capital gains tax rates are for you, okay? So 0%, 15%, or 20%. Now, as I mentioned earlier, I'm just touching on the surface here about some of these things. If you're a little confused, that's totally okay and normal. If it's your first time you're seeing some of this stuff, you may need to watch this video again, maybe more than once. So of course though, in my course, I have more time with you and I make sure you understand all these pieces of the puzzle and make it much easier for you. Obviously, I'm just teaching you on this one topic today, but in the course, I'm teaching you all different tax strategies, like how to make the S corporation strategy even more powerful by incorporating health insurance premiums and health savings accounts, how to deduct your home office, your cell phone, your internet, hire your minor children, establish retirement accounts. As a business owner, you can actually contribute over $60,000 in a Roth account. That's after-tax money for your retirement when you're a business owner. Okay, so have a look at the course if you want to learn how all that stuff works. But before I let you go, please don't forget, let me know in the comments below what questions you have. I'll do my best to answer them as they come in. If you learned something, give this video a like and maybe even share it with a fellow entrepreneur. And with that said, I'll see you in the next video or in the course.